Good evening. This is Ken at Tortoise Capital with a review of the year-end weekly strategy report for December 28th, 2019. We have a market that's in bullish, quiet conditions. We're overbought on all of the look-back periods except for the 3-day, which is in the middle of neutral. Price relative to the 200-day moving average is green bullish. ADX is strongly bull. The risk index is risk on with a reading of 1.044. The risk Z is neutral and rising, so it's the spring and now the summer, and since we're less than 1.0 and in the summer, this is still favorable for swing side trading. You can see the holdings that we had for December rolling into January. We'll reevaluate this on Monday. But you can see the leading candidates here on the basis of Friday's closing prices. ETF2 theoretical exposure is at 100% in its exposure to the world market model. Looking at the market monthly health check, had two real strong months in a row with a strong close. Two breakouts. Here's the Z3 excursion at about 335. To the upside, the 1 month and 2 month low, the bottom of the dragon, the Bollinger Band mean, the belly of the dragon 1 and belly of the dragon 2, which is also the PSAR flip. So this is all favorable and good to go. Just beginning to have the excursion. We are in the summer, fall, just crossed back into the summer, and still room to go to the upside. On a weekly, same basic thing, only we've had 8 weeks in a row with only this one temporary setback. It was protected against by the belly of the dragon. The Z3 excursion, a new weekly breakout here, 1 week, 2 week lows. This would be where my stop would be, about 317, 318, the 2 week low. Skin of the dragon, spine of the dragon, belly of the dragon, which is also about the Z1. The RL90 fair value and PSAR flip in this cluster, along with Bollinger Band mean, so everything north of 300. If that breaks, then it's down to the belly of the weekly dragon around 293, and then Z-1. Again, we are in the fall and well into the summer on the weekly. On a daily, we're also in the summer, closed really well. You see the 10-day look-back period, overbought. 30-day look-back period, well overbought. The previous Z3 from last week, we're getting ready to test that this week from the midpoint on Wednesday, and then the current Z3 breakout, about 328. 1 day, 2 day lows. This was also the Monday opening. The northern skin, the spine, the belly of the dragon, the RL90, Bollinger Band mean. Here's the long-term fair value, about 315. So for me, this range right in here, about 320, looks to be significant to me. That's the tactical noise that I'm willing to endure. But after that, I'm starting to protect against downside excursions. Blended monthly rebalancing review here. These are just some symbols that jump out at me that I want to prepare. The Qs because of their great strength, and IYR because of had a little rebound and has been so dramatically underperforming. In ETF 22, I would add technology and healthcare. EEM had a good week. That's an up-and-comer. Latin America on the rebound, maybe even consumer discretionary. And also that real estate. ETF 32, I'm looking at, again, healthcare. Has some room to gain. Brazil, China, gold had a nice defensive position here. Should check in the chat room for really a couple nice trades that Heather posted in the daily chat room on that one. And then since it's gold, I would be looking at WPM Wheaton Precious Metals as my execution index. In the Dow 30, I'm looking at Apple, Intel, Nike on their momentum plays. Boeing, because of this, how bad can it be? Yeah, but it had a nice turnaround, net for the week. I just can't see America letting that one go under. And then Disney, where we at here? Yeah, has had a month of underperformance, and so that's a blue chipper. I'm looking at a value play on that one. Sector spiders, strength in the farms and semis, metals and mining, and retail. Consumer discretionary, oil and gas, ready to make a turnaround. It's had a nice month after a horrible 3 and 6 month period. Oil and gas also, equipment and exploration. So maybe it's it's this continuing to flirt with the energy sector, which is starting to show some gains. Usual suspects here in the ETF Max. Pharmaceuticals and semis. The U.S. leading the way here. Tech and healthcare. The S&P at 62 is better than the rest of the world at 55. Inside the U.S., it's tech, large, smalls, then mid caps. Two weakest Latin American emerging markets. Technology and healthcare leading the way. And again, you see equities just crushing everything else. Only energy shows any kind of recovery rebound here as far as broad asset classes. In the ETF2, in the green sectors, I'm looking at biotech, technology, healthcare. And then in green and white, these are the ones that are was good, now great, and so we're looking to exploit new strength. And here in it's all tech and growth, and Vanguard growth as well. Slowing down on value, South Korean financials. Shifting to the daily report. Nothing in overreaction and channeling. Max Payne, you can see all the usual suspects in here. That I really love. Boeing, Walmart, Disney, Johnson & Johnson, United Health. I mean, Jiminy Crickets. How do you not love that to choose from? In the Dow Tactical Summary, Boeing at 3.4 to 1, Max Payne range compression, finished in a doji, and was actually positive for the day on Friday, but has really been underperforming. A couple breakouts that stand out to me: Visa and Microsoft, Intel and Nike had a real strong day at 0.85. McDonald's and Procter, I like those because of the Max Payne range compression numbers 4 and 5. ETFs, Treasuries, Japan, Asia less Japan. Some breakouts here in diamonds and Euro 350, emerging markets. In real estate, had a little 10-day breakout. So that one has been lagging as a defensive play. That could be some posturing for a rotation out of equities into that defensive sector. That's what I'm looking there. Next up in the super pinches, I like all those. Chevron, Walmart, United Tech, Caterpillar, IBM. Plenty to choose from. You can see the most positive Z stretches here. Nike and Johnson & Johnson already making this move here. In the auto framer, Boeing, Walmart, Johnson & Johnson all test out really well. Boeing, Walmart, Johnson & Johnson testing well. In the regression line fractal framework, same guys. Travelers, McDonald's, Home Depot, IBM, Walmart. Real estate at 3 to 1. Travelers has been kind of a stealth play, so we got to go take a look at that one. Top shelf, these are the ones that are deep value. Red, these are kind of like overheated. That's how far United Health has been above 10.5 ATRs above its long-term fair value. So that's kind of remarkable. On the daily squeeze, lots to choose from here. Um, all the usual suspects: United Health, 5-1; Walmart, Disney, Cat, Johnson & Johnson, Real Estate, Boeing, and the Dow Healthcare. A lot of good things to choose from because of the range compression on Friday. I like looking at the spring under the four seasons and then the leaders in the summer. So in the spring, I'm looking at Real Estate and then Home Depot. I'll be framing those. And then Cisco and Home Depot. I like, here's Cisco. And at the low end here, I think Home Depot. Yeah, in the spring. And then EWW Mexico has had a nice little run, and then XLP earlier in the summer there, consumer staples, looks interesting. In the NDXs, I like looking at these underperformers while the market is really going well, because if the market starts to get weak, then the chances of these collapsing is even greater. So Walmart, Disney, and Boeing, it's just you've got value already baked into the cake, but also front running in case there's some failure. Then you had a bunch of breakouts. All of these are the relative strength winners that broke out on every time frame. Same thing over on this side too. But again, financials look like they're underperforming. Metals and mining have some room to gain. Had some nice bounces here though in Mexico with a 3-day breakout. So yeah, it could be a rotation from here into these ones that are outperforming. So Verizon and Travelers for that reason. Travelers showed up earlier as I believe, as a max pain range compression. So I think we want to look at that. Yeah, that was actually a super pinch. So Travelers on that breakout could be interesting. Just a quick look at the, I like this turning point, still room to go. No resistance overhead. We're still early in this uptick because of this nice little pause and pullback. Set the stage for a nice rebound. Although we are long-term at about Z1 compared to the last 10 years. So it's starting to get a little pricey now. As quiet as can be, so danger. So one-day quick looks at volatility spikes, as we saw in the VIX last week. Starting to get overheated at Z2 on the 90-day regression line slope. The 30 has made a nice rebound and recovery, but to me, that's really starting to get noticeable. We already had 1, 2, maybe 3 legs up. The 10 has rolled over, temporary pause here. But yeah, I think when the 90 gets up to Z2 and starts rolling over, some concerns about the new year and some profit taken likely. Maybe what we got is the market at all-time highs. Now, if you're a conspiracy theorist, you might say, well, yeah, you run those prices up so when new pension money comes flowing in January, you can sell if you have excess inventory that you accumulated in December with all that free money that the Fed printed. Now you can sell inventory at an exaggerated price, and then when the bottom collapses out of that, buy it back at a lower price later in January. That's a strategic theory based on cynicism. All right, so these large signal-to-noise ratios, these are symbols that trade well intraday because they are mostly signal, whereas the ones that are noisier, there's a lot of intraday moves, but it reverses, and so the net on the day is a lot smaller. So these tend to be more tactical traders like IWM, whereas like IYR, once it starts trending, it trends. Apple, McDonald's are up there. So keep an eye on that. Nothing really exaggerated on the swings, Z-scores. Okay. Natural gas just getting crushed. new weakness in bonds. Yeah, all the bonds are getting smashed. So there we are. These plenty to frame up, and we'll be ready for next week. Keep your wrist measured and your powder dry.